Good afternoon and welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka. Well, it was turning out to be a fairly good day, but we saw a climb down of sorts from highs. In fact, 25,652, that was the swing high that we made today. But our experts, technical experts in the morning also pointed out that holding on to 25,600 will be crucial. But we've not been able to sustain that, we've not been able to defend that, and that's something that till that really happens decisively, if we close above 25,600, perhaps that would be the time when experts would become fairly bullish. But for now, we are trying to inch back up. We are around the 25,500 mark, but still it has been a considerable climb down from the day's high. The mid-cap index, although, is faring much better at the current juncture. In fact, mid-caps have picked up pace. Earlier, the breadth had turned negative, but once again, it is skewed in favor of gainers. So, the market breadth has turned positive once again. You have 1589 advances to 1386 decline. So, mid-caps are seeing some traction, even though we saw even the mid-cap index climbing down from the day's high. Bank Nifty has corrected a fair bit from the day's high. It's down over 350 points from the day's high, in the red, but marginally so. But the sectors that are in focus today are metals. This pocket has been shining bright. Even yesterday, in a very weak market, we saw metals holding out and providing some support to the market. And today as well, metals up in excess of 2%. IT, of course, after the kind of hammering and badgering it has seen, it did see some good buying interest, although it has pared or trimmed some of those gains, but still 1.5% kind of a gain on the Nifty IT index. Pharma is also doing well. Autos, Vahan data is signaling very strong registrations for the month of February, which is why autos were in the red in the earlier part of the session, but they've reversed course and are among the top sectoral performers at the current juncture. On the flip side, PSU banks, that has been a pillar for the market, is witnessing some kind of profit-taking bout. 1% down on the Nifty PSU bank index. Real estate, it was in the green, but it has fallen through. Once again, you're seeing some bit of red on the screen when it comes to real estate. Same goes for FMCG. This sector was also holding out fairly smartly, but it has succumbed to some bit of selling pressure. Just want to quickly take a look at some of the movers then, individual movers. On the Nifty, HCL Tech is taking the lead today, 3% up. You have Bajaj Auto, that's up 3%. Some metal names like Tata Steel, JSW Steel, Hindalco are among the gainers. Shriram Finance, I think earlier it was in the red in the morning. Right now it's trading in the green, up by 2% or so. Sun Pharma, is the other one that's doing well. Cipla is doing well as well. But Reliance Industries has turned negative. In fact, that's the top laggard on the index now, down 2.5%. So that's a deep cut coming in for Reliance Industries. I think that's why we are seeing some of these indices, Nifty, Sensex, giving up those gains. In fact, as we speak, the Sensex has slipped into the red. SBI is also down 2%. Eternal extending its losses. ITC also in the red. Kotak Mahindra Bank, SBI Life, HDFC Bank. So some of these banking heavyweights are also in the red. Also notable is the solar stocks, right? Premier Energies, Bari Energies and the likes. Vikram Solar, so to say, after the imposition of 126% tariff by the US on Indian solar imports. Some of these companies were on CNBC TV 18 and they have actually spoken about what kind of an impact it would have on them. But I think Premier Energies has said that it would not have any impact on them. But still the stock is down somewhere around 6% or so. We'll take stock of some of the mid-cap movers as well. But before that, we have a guest waiting. So let me bring him on board. Sandeep Bagla, CEO of Trust Mutual Fund, is joining in this afternoon. Sandeep, chatting with you after a long time. And a lot has really transpired for the market. Negatives aside, of course, US-India deal, clarity on that was a positive, but that has kind of been reversed after the Supreme Court verdict and Trump's retaliatory tariffs, global tariffs of 15%. But I want to focus on the positives, and the positive for me would be the fact that FIIs have turned positive for the month of February. Even yesterday, we saw a steep sell-off, but FIIs sold just 100 crore worth of equities in the cash market. So that kind of hints that perhaps some bit of confidence is returning. What are your thoughts? Would you say that valuations-wise, at least they are finding some comfort after the kind of correction Indian markets have seen? And are they here to stay? What do you feel?
See, I think what you're saying is right. We have seen some positive green shoots in the economy in like you mentioned that in the auto, in CV segments, we are seeing some amount of uptick. There are other valuations have also become a little more comfortable than before, and we have seen FPI flows trickling in. I would not say that there's a gush of flows, but definitely there is no significant outflow happening, which was the case in the previous months, in the last many few months. And now I think the FPIs are coming back. I think they are nibbling right now. I don't think it's time to say that they will be back for a for a longish period of time. It's too early to say that. But I think it's a good sign. I think the economy is also picking up slightly, and the FPIs are also back. So definitely some positive signs. But at the same time, the market is giving up the gains.
That's true. The sustainability is the factor, and that's really not happening. And a large part of it also is attributable to the AI scare, and that's not just an India problem, that's happening globally. What is your sense for IT companies? They were anyway reporting single digit growth. What would be a reasonable growth expectation now? Would it fall even further? Or, would you say that growth could also slip into the negative territory? Or would you say that, low single digits is something that would be more reasonable now?
IT has been in trouble, I think, in troubled waters for the last 1.5, 2 years, as far as I can remember. They had stopped going on campus recruitments. They had been laying off staff who were, maybe above 50. So they were facing some kind of a demand shortage, and they were recalibrating and it was reflected in the growth numbers also. I think what is the big change is that after the AI related doom stories, I think the investor interest will gradually wean away from them. So I don't think the business will suffer that badly, but there is a sword of Damocles which is hanging on their head, which will prevent any enthusiastic buying. So I think the premium valuations are quite some time away, and IT will continue to underperform the other sectors. So I think the big ticket IT's heydays are over. If they are able to build something on back of the AI related changes in the world and reclaim their position, which is also quite likely. But I think it's quite some time away. So for the time being and for the foreseeable future, I think IT sector is not very investable unless it becomes cheap.
Okay, so in your opinion, it's still not cheap, Sandeep? Because a lot of
No,
there is a bull camp and there is a bear camp, and it seems that you are in the bear camp.
it's not a question of bull or bear camp. I think I am just going from a situation where we were enthusiastic about the growth and we were willing to pay higher premium valuations for IT companies. But I think those days are gone. It's very clear that IT companies are not able to use their cash profitably. They are not investing in emerging technologies. They do not have ambitions to become a global competitor. So I think the excitement is gone and it is definitely moved to AI related spaces. So I think there could be dead cat bounces and there could be minor rallies. But I will not commit significant capital to IT sector at this point of time.
Not commit significant capital. I take your point, but AI story is still unfolding as to how collaborative it could really be. Of course, yesterday we had Anthropic event where they said that perhaps it could pave way for more partnerships. But how, what, of course, in the Indian context, we need to wait and watch. But this
Absolutely.
entire AI disruption, what does this really mean for the macro setup in India? Because in terms of food delivery companies, discretionary consumption in general, there are worries about big job cuts, especially in the white collar space, right? Do you think these are still early days to worry about it? Do you think it's overdone?
Yeah, I think, Nandita, my personal learning has been that if markets reach a certain peak level of valuation, they reach there and do nothing for some time to come. And by which time some negative trigger, some negative news can lead to some price correction. And I think that's what we are facing. I don't think anybody knows what are the implications of AI, whether it will impact a sector positively or negatively. Eventually, AI seems to be a very good productivity tool, which is now
Hmm.
seems to be that it could, lead to some job losses. There could be new series of jobs which are created after some time. So I think nobody knows right now, and markets, being markets,
Hmm.
don't like uncertainty, and markets are correcting.
Hmm.
And sometimes the reaction seems to be overdone, but I think valuations have to correct in general for before they become attractive. So AI, I think, is
Hmm.
more of an excuse right now. It is definitely transformational in nature, but we don't know,
Hmm.
we don't have enough evidence to either sell or buy. But market is selling because I think
Hmm.
it requires a correction.
Sure. Okay, okay, I take your point. But since you're talking about this entire AI issue, there is one sector that really stands to benefit, and that's it been rallying quite a bit any which ways. Metals, the whole data center bet and dollar weakness, a lot of these factors that are favoring metals. What's your own thesis? Because metals have already seen quite a strong and healthy rally. Would you still be a buyer?
Yes, I would be. I have been bullish on metals for the last 3, 4 months, and on a trend
Hmm.
basis. See, my personal belief is that we are moving into an inflationary world, which has primarily been created from overprinting of money for a very long period of time by the global central bankers. And I think it is a policy mistake that they are cutting rates at a time when inflation is above their target rate. Also, what Mr.
Hmm.
Trump and the administration are doing, they are destroying some of the belief in the independence of institutions in US. And just think about it. If you are a large asset allocator, if you are a large sovereign wealth fund, would you be interested in
Hmm.
investing in US? Because there's a possibility now, and that possibility was not there till 3 months back, that there could be a large scale depreciation or devaluation of the US currency. I have seen people talking about it on LinkedIn or Twitter, that do you think that Trump can overnight reduce the value of the dollar? It was not in the realm of possibilities a few months back, but that thought has come in. So where will people go? People will go towards real assets, and I think metals stand to gain. Of course, there is incremental usage in data centers in other areas, but I think it is more a shift in the asset allocation, a shift away from dollar, and I think the real assets will do well. I think metals will do well. There's a word of caution
Hmm.
here. When I've seen that silver went from $80 to $120 in a very short period of time.
Yeah.
See, typically that happens because of technical factors. People who buy gold or
Hmm.
silver in physical and sell in future, if the future moves up, they have to pay margin money, they have to cut their positions because there's not enough liquidity in the cash market. So I would urge that investors or traders be careful when there's a abnormal surge in prices. That could be because of technical factors and is likely to reverse. So be an investor or a kind of investor in these stocks rather than trade when the market goes up. So I think they are both,
Hmm. Okay.
there are both fundamental factors in play and technical. I think fundamental factors have a long runway
Hmm.
of growth. While I don't consider
Hmm.
metals as an asset class, like especially gold and silver, because
Hmm.
they don't have any inherent
Hmm.
cash flows, but still, I think
Hmm.
a reasonable allocation in these market conditions is warranted.
Okay, reasonable allocation is warranted. I take your point because we've seen how flows into gold ETFs have really panned out last month. They've outdone equities as well. It was 100% growth, right, compared to the previous month, and it's really been crazy ride for those precious metals and ETFs as well. But one last question, since I don't have much time left. The other big talking point today is the Trump administration ramping up its protectionist trade agenda. Of course, it has set its sight on the renewable energy sector as well. They've imposed a 126% tariff on Indian solar imports. Of course, companies like Vari, Vikram Solar, they have anywhere between 15 to 30% exposure to exports. But Premier has said that they don't have and doesn't really impact them. But how big a setback would this be for Indian solar makers' US ambitions and solar, etc., renewable energy? That was an emerging theme that most of the market experts were betting on. So, how does this really impact some of these players?
Yeah, I think, Nandita, I will address this in a slightly wider spectrum. I think we are moving
Hmm.
towards, like you mentioned, state protectionism, and the largest country in the world is behaving like this and creating tariff barriers and imposing tariffs on countries. I think the market should acknowledge this, that this is a trend which is likely to continue. We tend to react to individual announcements and we tend to miss the woods for the trees. I think this is a recurring theme. This is going to manifest itself in multiple ways. So one should be careful about companies which are exporting to the US or have a lot of dependence on foreign markets. I think one should focus on domestic
Hmm.
consumption, and one should find ideas to invest in where there's growth, visible growth, tangible growth, and where there's value addition and when there's less fear of dumping. I think these are the themes that one should needs to play: our domestic capital markets, capital goods, some of the banking and financial markets. I think these are the themes that we are bullish on, and I think those are the themes I think are more protected from the external threats and tariff related issues. And I think markets will give
Hmm.
premium valuation to these companies and gradually derate the companies which are dependent on in an environment on foreign exports. So I think one should think about it
Hmm.
deeply and allocate less capital to such sectors.
Sure, got your point. Be more domestic focused, and we've seen how really some of these export oriented sectors like textiles and solar, of course, the one that we were talking about just now, shrimp, aquaculture, how they have really reacted, especially since April last year. There's been a lot of spotlight on these sectors, and they've been fairly volatile. And now, of course, with this whole Supreme Court verdict and the retaliatory tariff and how things will pan out here on, these sectors will continue to be in focus. But with that, Sandeep, would like to thank you. Always appreciate your joining in and sharing your thoughts. Look forward to more in the future as well. Thanks a lot.
Thank you, Nindita. Bye.
Thank you. Bye. Well, on that note, let's just take a look at the market. We are just about 60 odd points higher on the Nifty, still below that 25,500 mark. And the Bank Nifty is trying its best to break into the green, but it's just between the green and red territory as of now. But on that note, let me bring on board Ashish Bahety, technical and derivative research analyst at ProfitMart Securities. Ashish, good afternoon and thanks for joining in. Solid. It was turning out to be a solid session. 25,650. That was back on the charts, but sustainability was the key, and we didn't really manage to defend that. How would you look at the setup for tomorrow? Going by that, would you say that the road will be rocky tomorrow, given the fact that we have the monthly Sensex expiry tomorrow?
Downside.
Ashish, I
I think
can't hear
25
you.
3,
I can hear you.
yeah, 25 300 is
Go on,
acting,
go
or
on, go on.
350, yeah, 25 350 is acting as a strong support area. That's where the 200 demo is placed. And on the upside, we've seen multiple times to 25 800 getting failed. So I think till the time market remains in this range, we'll see such sessions continuously where market goes till 25 600 or 630 or 700, and from there the profit taking happens.
Hmm.
Today, the culprit has been Reliance Industries. We have seen a massive drag
Hmm.
on because of the Reliance. Almost 50% is contributing towards the negative side. Along with that, I think Bharti and SBI both, along with HDFC. So we are seeing heavyweights is getting sold off here, and the lower or the smaller stocks are contributing more towards the Nifty on the side upside. Metal is the only pack, and along with the auto is the only pack which is shining today. So one should have to do a little bit of sector rotation, avoid index till the time, or have a contra bet on the index till the time market is in that range. We have to buy near the support and sell near the, or short near the resistance area. But that's a tricky thing to for most
Hmm.
of the traders, because trend following is a little easier compared to the contra trade or a mean reversion trades. So avoid index for the time being. Yes, Bank Nifty is looking much stronger compared to Nifty, but however, today because of the HDFC, there's a bit of flattish trade happening here. But I think one has to go, if one has to go long on the index side, Bank Nifty would be a preferred choice. On the downside, there's a strong support near 60,700. On the upside, we see even 61,800 is also possible on the charts.
Okay, upside 61,800 possible on the charts, and of course, Nifty Bank is the way to go when it comes to trades for tomorrow. But just about 1 minute to go for the markets to shut shop. Hold that thought, Ashish. I'll come back and we'll talk stocks as well. Just want to highlight some of the mid-cap laggards and gainers today, because the breadth of the market has turned positive. Mid-cap index has picked up traction after coming off from the day's high. So let's take stock of which are the stocks that are really doing well. Concord Biotech. This stock has surged to the day's high, 19% up on this stock. Lloyds Metals, there's a brokerage note on Lloyds, and we'll talk about this particular counter in just a bit with Ashish. The stock is up 7.5%. Jindal Saw, Graphite, Usha Martin. So a lot of these names, with respect to metals and graphite, etc., they are doing well, 4-5% kind of gains. Mankind Pharma is the other one that's up 5.5%. Laurus Labs, so pharma names also up and about. Aurobindo, Natco, Schaeffler reported good set of numbers. The stock has anyway been doing well today, another 4% up. Some of the mid-cap IT names also feature on the gainers list after the kind of hammering they have seen in the last month or so. On the flip side, what's really saw extreme selling pressure were from the solar pack, right? Vari Energies down 11%, Premier Energies down 6%. Vikram Solar was also another one that saw steep cuts. That was, of course, after the imposition of 126% tariff on Indian solar imports. And some of these companies came out and spoke to CNBC TV 18. And in fact, Premier said that they don't have any exposure to exports anymore, but still the stock is down. I think a sentimental impact really playing out there. Some of these textile names like Welspun Living also down 5%. SKF India, even some of these gold finance names were under pressure. Manappuram Finance down 3%. You have Godfrey Phillips also after the recent up move. Last few sessions haven't been all that great for Godfrey Phillips and even ITC for that matter. They've been in the red. So that was about the broader market. But for the day, we've settled higher by about 50 points or so on the Nifty. So 25,480 or so, that's where we have shut shop for the day. Sensex up just about 50 points, flattish. Mid-cap index managed to outperform and end higher by about 0.5% or so. Breadth also skewed in favor of gainers. It did turn in the negative zone, but we saw good traction in some of the mid-cap names. Reliance Industries, that was as Ashish also mentioned, that was the bigger culprit today in terms of how the Nifty really gave up most of its gains. The stock was down 2%. SBI, given the fact that entire PSU banking universe was under some selling pressure today, SBI being the big one, saw a loss of 2%. Adani Ports, Eternal, Bharti, Airtel, ITC, so all these heavyweights also saw a fair bit of cuts. HCL Tech, Bajaj Auto, Tata Steel, TCS, some of these auto, pharma and metal names managed to do well today. So all in all, we saw a climb down from the day's high, but still we managed to see some gains for the market on the first day of March series. Tomorrow, of course, it will be the Sensex expiry. So expect a fair bit of volatility tomorrow as well. But Ashish, coming back to you, metals, good day, and even yesterday when markets were fairly weak, we saw metal providing support. Today we had Lloyds Metals that was up and about, shining bright, 8% higher. Nomura has initiated a buy call and the target price is at 1600 or thereabouts. How are you viewing Lloyds Metals within the pack, and between Hindalco and Vedanta and some of the other steel makers, what do you prefer?
While talking about Lloyd Metal, probably the way the entire metal index has moved, and yesterday itself we have seen most of these F&O stocks were showing a long build-up or at least a short covering, so it was clearly visible on the charts. Lloyd has given a breakout above its 20-day exponential moving average, and I think the stock is well placed to travel till move till its 200 daily exponential moving average, which is placed at 1350. So another 100-point rally is possible on the stock. Yes, 200 EMA will act as a strong resistance area, but however, if stock surpasses that, we may even see 13. If stock surpasses 1350, we may even see 1500 points, 1500 on the charts. On the downside, one should keep a strict stop loss near 1220. Now, yeah.
Okay. Sure, that's Lloyd's. What about the rest?
See, on the ferrous side, sale is looking really good on the charts. Most of the time, the stock has been in the last trading session has been in the ban list, but today it's out of the ban, and we've seen a good momentum here on the stock. Our target for sale is 175 on the upside. On the downside, one should keep a protective stop near 160.
Okay, sale is the one that Ashish will be betting on. But let's talk about this other pocket that has been in focus today. I want to draw your attention to Vari Energies in particular. The stock shed 11%, and of course it's news based. But recently, Vari Energies has been bagging orders, and solar has been an emerging theme that experts really talk about. How should one approach these stocks now? The likes of Vari, Vikram, Premier after today's down move. Do you are you spotting some kind of a change in the structure, and how should one really approach these stocks here on?
See, Vari and Premier are the two stocks from the solar which are in the F&O segment. And yesterday we've seen a bit of long build up in Vari engineering. Stock was up almost 4% up, and today because of the news flow, there's absolutely a reversal trade happened here. Stock did a knee-jerk reaction. So our advice would be let's wait and watch for a couple of days. Let the dust settle down here. However, on the downside, today's low becomes a strong support area, which is 2600 zone is a strong support area for Vari. But however, on the upside, 2850 is a strong resistance area. So we think stock might accumulate or might consolidate between this range of 2850 to 2600 for a couple of days. And if any breakout above these levels would initiate a trading opportunity on that side of the breakout.
Okay, Vari Energies, 2600. That's support. That today's low becomes a support on Vari Energies. But Afcon's Infra was the other stock that was in focus. There's a client who has terminated the notice, has issued a termination notice for cancellation of a 113 million euro contract. Now the contract was 93.5% complete, so that comes as a big setback for the company, and the stock did recover quite smartly from the day's low. But if you look at the 1 month chart, 6 month chart, you will see that the stock has been under a fair bit of pressure, and it's in fact heading towards its 52-week lows as well. So is the weak structure here to stay for longer, and is this a shorting candidate at all, this stock?
From its all-time high, stock has already corrected 50%, and from the, I'll say, 52-week high itself, stock is down almost 40%. So one should not try to do a bottom fishing here because there's still a lot of selling pressure on the weekly charts, and there's no respite. And whenever we've seen any bounce back, stock has not been able to cross its 20-daily exponential moving average. And we've seen a massive selling pressure near that zone. So 20-daily exponential moving average acts as a strong resistance area. However, if anybody is holding long, should keep a stop loss near 295, which is almost today's low. This today was a good session, I'll say, because despite of the news flow, stock did a bit of recovery. That's a positive sign. But however, we would go long only if the stock breaks out above 315.
Okay, 315, a breakout above that level, would of course make it a buy candidate. Afcon's Infra, but Autopac was very buoyant today. It started out on a flattish note, but of course the reasons for the up move, were fairly fundamental, given the fact that Vahan data is indicating that it could be the best February, for the auto space in terms of registrations. We saw good uptick on Bajaj Auto and M&M, etc. All of them ended in the green. But how are some of these stocks now looking on the charts? Would you prefer two-wheelers, four-wheelers? Because some of these companies have really seen gains in market shares post GST cut, and they've seen a very, very good run, especially since last August. So, which ones are looking most attractive on the charts?
The entire two-wheeler pack is looking attractive, be it Bajaj Auto, TVS, or Hero Moto, and all of them has shown a strong uptrend today's trading session. Most of them were up almost 2.5% to 3%. If I have to pick any one of the three, TVS would be a preferred choice. Stock has given a clean breakout, and I think it has made an all-time high today. So stock is in a blue sky trajectory, and we think stock may even hit 4,000 and 4,050 levels pretty soon. On the downside, 3880 is a strong support area for this stock. Out of the other than the two-wheeler auto, from the four-wheeler pack, Maruti is looking good. Stock has been consolidating from last 8 to 10 trading sessions near its 20-day exponential moving average. And we think a breakout above this consolidation could easily make Maruti move for another 1,000-point kind of a rally. So on the upside, we assume 16,000 is possible on the charts. On the downside, one should keep a stop loss near 14,800. Ashok Leyland is one stock which is looking good. Stock has been continuously in strength and has been outperformer of the entire auto pack. So one should focus on Ashok Leyland also in the CV space. By keeping a stop loss near 2008, one can expect 220 also possible on charts.
Okay, so very, very bullish view coming in on some of these auto names. Maruti, of course, 16,000 possible on the charts as well. But there's another one, which is looking extremely good at the current juncture, and that hit a fresh 52-week high today as well. That was Polycab. Now, Motilal Oswal has a buy recommendation. Target price is at 9,600, and they're pretty bullish. And they've said that the company has gained meaningful market share in the first 9 months of FY26, and they are also growing well ahead of the industry. The company, of course, has reiterated its a 1.5 times industry growth target through FY30 as well. And of course, the fact that real estate demand remains strong is something that bodes well for the company as well. And affordable housing, government city economic region push should further support the wire demand as well going forward. The stock, as I was mentioning, has hit a fresh 52-week high today, and it has seen very, very good traction in the last 1 month as well. How would you approach Polycab?
So this stock has shown a massive resilience. Every downtick or every downgrade by any brokerage, we've seen a quick turnaround in the stock, and the stock managed to surpass its all-time high every time. So today also it made a fresh new high. And however, at this point, we are not recommending any buy on the stock because chart looks a little stretched out and a little far from the mean. So if I'll say on a weekly chart, the 20 exponential moving average is released at 7,500. But however, any dip can be used here as a buying opportunity. On the downside, 8,000 is a strong support area. On the upside, anybody is holding long can have a target of 8,900 also.
8,900, that could be a target on the upside. That's about Polycab. But, I just want to shift your focus to one stock that was in news today, IRFC. The government, of course, has launched its OFS to offload stake with a green shoe option of 2%. Of course, there was supply pressure and the stock was down almost 4.5%, but railway stocks haven't seen any traction. IRFC was, I think among the most talked about stocks in 2023 when the railway rally was really taking shape. But how do you approach? And tomorrow, of course, this OFS will be open for retail investors as well. Any thoughts?
See, the stock has given a sharp reaction to the OFS, and if you'll see on the chart also, the weekly chart, we have seen continuously 7 to 8 weeks, the stock has been making lower lows. In this 7 to 8 week tenure, there's only been 2 weeks where the stock has managed to give absolutely a flat kind of a close on a weekly chart. So there's a bit of pressure of profit taking here visible on the charts in IRC. On the downside, we assume that even 97 is possible. So it's a sell on rise candidate for us right now. On the upside, one should keep a stop loss near 109.
109, that should be the level to watch out for, and sell on rise. That's the approach for IRFC. But one stock that has really been buzzing is DEE Development. Today as well, the stock was up quite a bit, 5%. Last 5 days, it's up almost 40%. Is it advisable to chase this momentum?
See, if anybody is chasing such a small cap company, it can be chased, but however, one should keep a strict stop loss because the momentum may fizzle out pretty soon. So one should keep a stop loss near 270. There's a clean breakout, and from last 2 weeks, we've seen continuously buying happening in the stock, which is delivery-based buying happening here. On the upside, we assume 360 is also possible, but one should keep a strict stop loss near 270.
Okay. Keep a strict stop loss. It's okay to chase it, but you need to keep a strict stop loss, at least when you chase some of these small cap names. I haven't really asked you your thoughts on IT. The kind of moves the IT stocks have seen over the last 1 month has been staggering, and that too on the lower side. Today we've seen some buying emerge, but is sell on rise the strategy for IT as well, both on the mid cap and large cap front?
Certainly. So not just sell on rise, it's a short on rise strategy we are deploying on the IT. We think there's more pain ahead in the IT as a space as a whole. And the way AI is evolving, the entire arena or the game is going to get changed. We think the software engineering itself as a space might evaporate, and probably there will be more of agentic engineering or prompt engineering which may take place in coming days. So some of these companies may have a going concern issues coming, and specifically the large cap IT, which they are more vulnerable to this tactical shift which is happening in the space. So one should avoid this space as a whole. Stick to banks or probably metals or auto. There the opportunities are much brighter and much cleaner.
What about oil and gas? Crude is back above 70, 71. Geopolitics, playing a role here. ONGC, Oil India have seen good uptick. But even for, the OMCs, the likes of IOC, BPCL, they've still managed to hold their ground. So what's the play here when you talk about the energy stocks?
So that's interesting because both of these stocks are showing strength. I mean, oil marketing companies as well as ONGC and Oil India. However, they have a distinct, I'll say, inverse correlation to their prices or to their fundamentals. But however, we have recommended a buy in ONGC near 250 zone, and for our target on ONGC would be 290. So we are not recommending any fresh buy on ONGC. However, we still hold that 290 would be a good point to book some profits in ONGC. A fresh buy at IOC cannot be recommended at this level. But however, any dip can be used here for a buying opportunity. I think 177 is a strong support area. So if we get IOC near 180, that would appeal to be a good buy by keeping a stop loss near 177. On the upside, we assume that 187 is possible on the charts.
Okay. ONGC buy on dips, and of course the fact that some of these OMCs have held their ground despite a surge in crude prices makes them interesting as well. But we were talking about some small cap movers, and I'm really tempted to talk about some of these stocks that have rallied in excess of 60% in the last 1 month. Jindal Poly. This stock today, solid volumes, 4 times versus 10-day average. Stock is up almost 30% in the last 5 days. So, you've already mentioned that, while chasing such momentum stocks, at least on the small cap side, you need to maintain a strict stop loss. Here, what kind of stop loss would you work with?
See, if you see the charts from last 5 weeks continuously, there's higher highs pattern happening here, and there's a continuously buying happening in general volume. Today's session was a clean price volume breakout where we have seen almost close to 6 million shares being traded, and I assume that at least 50% plus would be the delivery volume. On the upside, we assume that 710 is possible. On the downside, one should trail the stop loss. Anybody who's holding long should trail the stop loss near 590.
Okay, 590, that should be the trailing stop loss on a Jindal Poly. Some stocks, at 52-week lows as well, the likes of Suzlon for that matter. How would you approach Suzlon? Would you be, not very enthused, or would you look at the stock at these levels?
The stock has absolutely disappointed the day it entered into the F&O. We have seen a continuously shorting the stock, and every rally is getting used by the bears to short the stock. We've seen a good buying interest in most of these power and even capital goods companies. But however, this stock has disappointed. We assume this stock is a good sell-on rally candidate or shorting candidate. On the downside, 40 is possible. On the upside, one should keep a stop loss near 45.
Okay, that's the view on a Suzlon. Another stock that was in focus today was Aditya Infotech. News flow here, promoters along with Dixon Tech offloaded somewhere around 6% stake through a block deal. The floor price was almost at par with yesterday's close price. The stock ended higher by 7%. The stock has been a good mover in the last 1 month, but it did see some bit of consolidation in recent times. But would today's move, indicate that the upside has resumed?
Though the stock has a name of Infotech, but stock is mostly into the space of, I'll say, cameras and video surveillances. So overall, the chart structure, one should not assume that being the Infotech name as suggests it's an IT company. We've seen a good buying interest in this stock. So one can chase this momentum, but keep a strict stop loss near 1500 zone. On the upside, we assume even 1700 is possible.
Okay, that's the view on Aditya Infotech. But I want to get in your thoughts on some of these quick commerce names as well. Eternal for that matter. It has come under a bout of selling pressure. Today it started the day on a positive note, but failed to hold on to these gains. Would you be short on the likes of Eternal, Swiggy?
Yeah, so I'll like to give a disclaimer. We have already initiated a short call on Swiggy, and we are holding that short call. Though our target have come, but we have revised the target on the downside, and we assume that even 300 might get breached in this fall. So any pullback can be used as a shorting opportunity here. One should keep a stop loss near 320. As I said, 300 stock might even breach 300 in this fall right now. So there's enough pressure in both Zomato and Swiggy, not just from the price point chartically, but however the business is also getting disrupted for them, or it's getting competitive for them. So a little piece of cautious advice for even the investors: don't try to catch a falling knife here.
Okay, short on Swiggy, and it can of course breach the 300 level as well in this downtrend. All right, those were all the stocks that were on my list this afternoon. But going into tomorrow, any trades that you would be recommending?
So SAIL is one stock which we have recommended and which we are liking even after today's trading session. So we assume that 170 and 175 is possible on SAIL. One should keep a stop loss near 160.
Okay, SAIL. That's the recommendation coming in from Ashish. Ashish, with that, we'd like to thank you for taking out time and joining in. Always a pleasure discussing all these stocks with you, and look forward to more in the future as well. Have a great rest of the evening. Well, that was Ashish Bahety with his recommendations, with all the market technicals and the setup for tomorrow as well. And he's recommending a trade on the Nifty Bank Index vis-a-vis the Nifty. But yes, today, we saw a volatile day of trade, given the fact that we clocked in the 25,650 mark, but didn't really manage to defend those crucial levels of 25,600. We've not even been able to close above 25,500. So, just about 0.3% kind of gain coming in on the Nifty. But the mid-cap index fared much better. It managed to gain somewhere around 0.6%. Breadth also thankfully turned in favor of gainers. Metals, autos and even IT saw some value buying today. But PSU banks, that has been a pillar for the market, saw some kind of profit taking today. Real estate and FMCG both slipped into the red. Autos saw good traction on the back of indications on the Vahan registration data front. So all in all, disappointing to say the least, because 25,600 was turning out to be a good day, but we didn't really manage to end on that note. But let's see, tomorrow is Sensex expiry, monthly expiry as well. So expect a fair bit of volatility, but all eyes will be on the 25,600 mark. If at all we manage to close above that, that would be, something that would bring cheer to traders and investors. But with that, we are completely timed out on this edition of Closing Bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and have a great evening. Thank you.